Dickey here, and I wanted to give an update. And I'm not one of those guys that says I told you so, but it's going to be one of those times where I'm saying I told you so. Now, what I want to point out here is what started last week. And as you can notice, last Friday, as I'm showing out here, right after the report came out, everyone was all excited about this. It was a perfect report. It wasn't too hot. It wasn't too cold. It was all this kind of stuff. And I told you to read into it and to keep going down the road and not buy into this baloney. And look at what's happened since that point. It's just basically come off the planet and continued to crater ever since. Now, I'm not saying it's right, wrong, or indifferent. And as I continue to tell you, it doesn't matter what I think. It matters how the market responds to this information. And look at how the market has responded to this. This is how crazy all this stuff is. So I want to put a couple videos up here. So this one is from last Friday.
Into the U.S. trading day, Friday, September 1st. Here are the top market stories that we're following for you at this hour. Jobs just nail it. Labor market paints a Goldilocks picture. Traders start to...
Okay, so the jobs just nail it. They paint a Goldilocks picture. Really? If this is so Goldilocks, why is the market just going off the planet at the moment? But again, let's listen to the rest of this.
Price out, Fed hikes. And that means good news is good news. Stocks up, yields pop. It's on the front end in particular. The dollar pretty much stays flat.
Now, this is a part I want to focus on here. Now, remember, as I showed you before, the market on Friday, right after this jobs report, jumped up. But so did the bonds. And as I've been telling you, you got to watch the bond yields far more than anything else. Because if the bond yields are going up, the market, no matter how on a short-term basis, is not going up. And it was an interesting dichotomy. It lasted for about an hour.
Flat. The market really buys into the soft landing scenario. Do you buy into it? And the state of manufacturing, we get the latest read on the economy with instant analysis from Tim Fiore, chair of the ISM's Manufacturing Business Survey Committee from New York. I'm Alex Steele with Danny Berger over in London. Guy Johnson is off today. Welcome to Bloomberg Markets. It's Goldilocks. Just for how long, Danny?
Yeah, that's the question. I got to say, they're even finding some reasons to maybe sell now. The 2-year.
Okay. So again, it didn't even make it 30 minutes into this thing. And they started to sell it off. Because again, you got to look at the bottom part of this. And if you look at the numbers, they were expecting 177, came in at 187. So it's higher than expected. And again, this is not a major issue in my opinion, because to me, jobs are good. Not a problem. It's not like we're adding 500,000 or 600,000 jobs. We're talking 187,000. So it's not a spectacular report. It's just hotter than expected. But boy, they tried to blow this up and make it a good thing. But more importantly, in addition to that, we've got today. You got these idiots out here.
Has your thesis is worked nicely. Would you make adjustments to it if we do see growth really roll over?
Our thesis all year is that we've been cautiously watching the market. There's no doubt the market has had a great run the first 8 months of the year.
Okay, so you've got all these idiots that are cautiously following the market, and they've missed out on the NASDAQ being up huge this year. But we're positioning for a pullback. Why? This is my interest, and I'm not saying they're wrong. My question is, why are they doing the pullback? Because again, they've been wrong all year. So why should I listen to you guys now?
Even with some volatility in a down month in August, we're still up. The S&P 19%, global equities up 15%. But there are a lot of headwinds, is Sarah, and you were just mentioning, inflation might be stickier than expected. We expect the Fed is going to have to keep rates higher for longer. We heard...
Now, everyone keeps saying higher for longer. What does that really mean? And no one wants to come down and actually say what it means, which again, what's higher and what's longer? Is it 1 month, 2 months, 5 months, 2 years? And again, what's higher? Is it 5.25? Is it 5.5? Is it 10, 18, or like Turkey, 25? Which clearly it's not working for Turkey either. So you got to wonder at some point if what we're doing is really going to do what we want it to do.
And Collins this morning say that until there is a clear path to inflation coming down, that the Fed will not revert and pivot. And that's...
Now, again, what's a clear path to going down? That would be my biggest question to you. We've already come from from 9 down to 3, which was a 6% decline. Now we're stopped there. We expected that a little bit. As I've been trying to say all along, last year, $4, 4.08 per gallon versus 3.95. You're talking nothing as far as a reduction. What, 5 cents, whatever, 13 cents, I guess it is. I mean, tiny. It's not even, percentages wise, it's not worth even looking at. So it's basically dead even. So we're not going to get any help going forward on inflation. And I can guarantee it's not going to be 3.8 next, because gas prices have continued to go up. And we're probably going to get a hindrance here the rest of the next few months. Now, what we're going to probably hear on this going forward is going to be that the core is going down, which it hasn't been yet. It's been following the CPI, the total. But my question is, when we get CPI coming out in a few days, last month it was 3.2. What if it comes in at 3.5 or 3.6 and the core is not down? And we've got this baloney going on. We're going back the other direction. Does that mean he's got to raise another 3, 4, 5, 10%? I think the market's not ready for this. But you've heard me say that before. With this kind of a decrease last month, I would not have thought CPI was going up, but clearly it did. And the core wasn't that helpful either. So I'm saying going forward, right, I don't think we have anybody looking at this the right way at the moment. The market has to figure this out, and I think it's going to take time. And yes, I do think it's going to be longer. I don't think it needs to be higher. I think where we're at is perfectly fine. I don't think we need to come down. I don't think we need to pivot. I don't think we need to have even Powell come out and say that. I think he needs to go out and continue to say what he has been saying all along. So I think we're going to go through a few weeks here where it's going to be difficult. I think CPI is going to be a rough next week when it comes out. I think they're all going to start guessing about what Powell's going to do. And at the moment, or at least last week, we were down to 20% that there was not going to be a rate increase coming up with the next Fed meeting. I'm going to be interested to see what those numbers are tomorrow, whether or not it's gone up. And I'm guessing it's probably going to be closer to 70, 80%. So if that's the case, I still don't think he's going to do it. I don't think he needs to do it. I think what he needs to do is keep it where it's at and just stick here for a long period of time. And I think we need to stick here until we get under 2.5% if he's going to focus on the 2% goal. And again, we can debate whether or not 2% should be the target that he's going after. And I don't know that I agree with that. But if he's going to focus on the 2%, I think he's just going to have to stick where he's at and just tell people we're going to stay where we're at until inflation gets under 2% consistently. And once we get it under 2% consistently, or at least 2.7 or in that ballpark, or we're not going to get to 2. I don't think he needs to go up anymore. I think it's a mistake to go up more. It's not going to be helpful. The only thing that he's going to do is break something. And I think we've broken enough things already. But the main reason we've got inflation right now is oil. And the problem is oil is pervasive through everything. We've talked about this, and we're going to continue to talk about it. It's in every milk carton. It's in every piece of plastic. It's all of this stuff. So as oil goes up, the prices of pretty much everything go up. Transportation, to move your stuff from Walmart's trucking and Target's trucking and Dollar General's all that stuff, it all costs more money. Airline tickets. And at some point, they're going to be fighting the battle where people are going to stop paying and go back down. And the other one that's a big issue here, and I've heard several other people talk about it, you've heard me start mentioning it, and it's going to be student loans. This is going to be a problem for a lot of people. They haven't been paying them for 3 years. It's not in their budget, so they've been able to take extra vacations, they've been able to buy extra things. So they're still going to be spending the money. It's going to be spent on that rather than on goods and services. So you're going to see a decline in the spending of the consumer. So I don't think he needs to do anything here. I think he needs to wait. The mortgages being higher is going to be deflationary. Car payments being higher are deflationary. Credit cards being higher, deflationary. There's a lot of things that will come if he allows the market to do its job. He's already raised. He doesn't need to do any more. But I think you're going to see the market not take this positively. There might be a day off here or there, but until Powell comes out and speaks in the end of September, it's going to be a rough patch, in my opinion. So take it with as many grains of salt as you wish. This is not going to be a positive thing. Oil's not going to be a positive thing. I think CPI is going to be a negative thing. So talk to your financial advisor. Make sure your portfolio is set up the way that you need it to be over the next several weeks, because it's going to be a rough road. Dickey out.